Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording Saturday morning, May 31st. My name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing good, doing good.
That's great. The theme for today's show, Barry and I have been talking, is well, there's a lot of movement in a lot of markets, but we've gone nowhere for the last 2 weeks. So
hmm
what does this sideways mean? How is it likely to resolve? And what are the probabilities favor, and how do we use the levels to and the squares to help us navigate here? That's going to be the theme of the show. It's kind of every week, but because of the sideways nature that we've seen for the last 2 weeks in a lot of different markets that you'll see, we're really at a critical spot, and no better chart to show you that than this beautiful circle we've been watching for a few months now.
hmm
So, without any further delay, Barry, let's take it away. Let's get into it.
Well, this is the S&P chart that we looked at last week. This is the ES, the front month. And what can we say? We talked about the circle last week. We talked about the intersection here and how we had a nice reaction. And ideally, if this is really weak, what would happen is we'd get a little bit of a counter trend. So ideally, it should hold at the circle and probably follow the circle down, right? That's the textbook version of it.
I mean, but look at that. That's pretty darn good. Look how it's hugging that circle, man.
Yeah, that's the textbook version. And this is not bad because all the tails are, outside the circle, right? So the tail that we had on the spike day, uh, going up to the 59.90 level again, it looks a lot like a little false break because we came back and Friday we actually went much lower. So that's a classic case of that's a classic sign of a false break. So that's in place. Now, on the other hand, we're also holding, speaking of 50% levels, we're also holding this 58.72 to 74 level, which is the support level we've been talking about. But you can see how this level's been sort of, we haven't really held above it, and we really can't. We haven't really made a clear sign of, getting stuck below that. So when that happens, that means there's something else happening. So we have this time to examine it from that point of view, and that's from the low, and that it's around 144 degrees up. So we'll look at that in a minute. For now, I think next week the levels are fairly obvious basis the daily. 59.90 we want to keep an eye on. On the support side, it's 58.74, 72 to 74. And that bracket, I think the key to see is if we can take out Friday's low, right? If we do that, then we can definitely go lower, and then the counter trend will probably get stuck in this area. On to the upside, obviously we need to take out 59.90, and then this zone you can see there's a lot of overhead. We talked about how this 59.90 is really where the real overhead kind of sort of begins, and we've been poking there and not making any progress. So if both of those sides are held, then we can expect more sideways. I think that's how I would like to look at it. And with this potential false break in place, if we can't really follow through, Monday or Tuesday, taking out Friday's low, then I think that's also think about it, potentially a longer consolidation or another retest, going up into the highs, and that would, give us kind of like a three drives kind of a pattern right through here, right around 6,000, right? 59.90, 6,000, right in that area. So that's what I'm seeing on the daily. Ben, you want to add anything to that before
Just
we
that
move
a
on?
lot of times with those circles, when they do break out of the arc, you can get violent moves in the opposite direction. Like now we're heading down in the arc of the circle. If it actually breaks out to the
hmm
outside, we could see a pretty good move to the upside.
That's right. So that's why we want to watch to see, that's why the sort of I kind of coordinated that. That's exactly right.
Hmm.
Because if we don't take our Friday's low in a hurry, Monday, Tuesday, then forget the false break part, which also means we're holding above 58.74. And if we're doing all of that, then another retest. going up to the highs is definitely in the books, right? That's the only other option. So we got to watch that. Of course, if the lows go, then probably 57.95 area is really the next big support area.
What's
92
that
to
price? What's the
95.
price level on that quarter square above? Is that like 60 some 60
Well,
40?
that's 60.53.
Mm-hmm.
I mean, that is another shot, right?
Yep.
That's another really good possibility. We'll see. Yeah, that's what I have for the daily. Let me hold on. Now let's jump to the cash chart. And we left off with this square coming off the low, April lows. And the idea was, this 59.90 area is providing a lot of resistance. I start, yeah, 59.90. And we wanted to see if we're gonna, get through that or not, or stall under it. And it's stalled below for sure. And we're holding above this 58.48 level, which is a quarter of the square, quarter of that square of 72 here. And obviously it looks like the futures chart, both moving in similar way. So the structure, how we're going to handle it is pretty much the same. We're going to look at to see if Friday's, a pretty good range. We did, eighth up a square just in one day's movement. So if Friday's low gets taken out, obviously we want to watch that to see how the big levels hold up, especially this 57.50 is a key level. You can see we marked out that zone earlier on the cash chart, and that's where we held earlier. So that zone is still active. That's one. Then we have a 50% level, and then another zone by 55.82. So we don't have to go that far, but that's what we have on the board, right? To the upside, obviously this 59.90 has to get taken out, and if we can sit above that somehow, then I think we have and you can see how sitting above that would pull us right into this zone. Okay, so then we have to deal with about a 30-point range. And if we can set here, I think then, obviously that circle is broken. And like Ben said, we could get a big push up to new highs. Now, when the low came in, I didn't think uh, we had it left in us to do that before we go up and really finish up some business. Let's see what happens. But the way we're going to trade it is to really watch these levels, and until this 59.90 price gets on top of that on the cash chart, there isn't a whole lot to do other than, I mean, no matter how you trade this, we were basically going sideways. At least we know there's overhead, there's a level here to watch, and we also know there's a floor, there's a level below we're watching. And so far, it's trading perfectly in between. If you're writing options, it worked. It was a great week for that. If you're looking for directional movement, not a whole lot. I mean, we'd had a lot of movement. It was great on our 30-minute charts, but on the daily, not so much, right? It was kind of going in circles.
Hey Barry, quick question for you. What significance do you place on the fact that the futures made a false break high, but they made a higher high, and the cash did not. So far, it's a lower high.
Right. So I'm thinking of, I mean, they both have a similar meaning, not the exact one. Cash, I mean, the false break would imply weakness, pending weakness, which we started to see. And the
Hmm.
lower high is also sort of implying pending weakness, right? It's a lower high. Selling came in both cases. So that's kind of what I'm checking, watching. I mean, just because the cash wasn't trading, we have to sort of take it take it that way.
Hmm.
That's my take.
Okay.
But both of them are pointing at the same, sort of the same direction, right? They're both pointing sort of weakness, which we got. So we'll have to watch, the next couple of days to see if we can follow through. Well, that's all I have for the cash. Let me see. Give me 1 second. Now here you can see we didn't even get, we don't have a false break. We have a lower high, and we haven't really been able to clear this. Although we're poking at it, this 42,600 level, we're still under it. we tested the 41,348. You can see here. Like if you're watching this show every week, you remember this the quarter square. We sort of talked about these are the two levels. So we've been between 90% of the time. Again, we're watching for the same thing until we get a break. It's probably some kind of a consolidation. So what to do? And similar things have happened. I remember what was it, December, January. We're going sideways here forever. It felt like, and eventually it broke. And the break was really this, taking out this 44,300, right? Once that happened, cleared up, and this big outside bar was the poke into that zone, failed, and then we started, that started up the whole down leg. We're watching this. For now, there isn't a whole lot till we clear one side or the other. So I think that's probably a good way to move forward. This is the continuation chart, and the square is coming off the low in October of 22. The 5750 held here, and 5892. I'm kind of going to leave it alone because that was sort of a marker. It put out, that's where everything held on the last round, this cycle up. And now, we're kind of crisscrossing that, but the support is being held. Not very convincing to be very strong, but we have we have the squares coming off of low and high, giving us a much better bracket. So we'll just follow through with that. And let's see what else we have here. Let's take a quick look at the 30-minute price action that we had last week. It was a short week, and we opened about 58.37. That was a big deal, right? That was a key level you were watching. And then we had 58.64. We got above, held above, ran up to 59.27. I mean, that was a big area to get above or not. So eventually, after a little bit of trial and error, got on top, went towards 60.19. Really couldn't do it, failed, got back under 59.27, and that's where we stayed. And Friday, we tried to come back, but we really couldn't. I mean, we failed again. So for next week, you guys, for the short term, this is really the key. So watch the 59.27 level, see if we can settle above, and then, obviously clearing 59.53 would be like the first sign that we're going to go up and try for new highs on this leg, on this chart. So it would be another test of 60.19 and up in that area. So if you guys follow us on X, these charts are getting posted every day along with comments. And then I know you post for a number of markets.
Sure. And if you look, man, you can see the sideways glaringly right here, right?
Just
2
here.
weeks
Yeah.
basically, right
Mm-hmm.
there, and then
The
going all
whole
the way
thing.
back to the 12th. Yeah.
Yeah. It's starting to affect people, I think. So,
Yep.
and the breaks are very quick. These are like flushes, it's something you get in the morning around the open, right? There's a big flush and it
And then it
sort of flush to the
rallies.
up. Yeah, it
Yeah.
rallies and then flush to the up. But the majority of the work is right around the block between 58.64 and 59.27. So this
Hmm.
sort of the blue line and this one, right? So what else can we add? Well, that's it. We're really looking to see where this sideways is going to break to. Obviously, nothing speaks louder than price. So we're going to watch these levels. For the downside, we talked about Friday's low getting taken out. So if that happens, obviously 58.37 goes. So that'll tip everything to the downside. And if we can manage to get above 59.27, then I think we have another shot at testing 60.19 levels above it, right? 60.44. All right, this is the cash weekly chart we've been watching.
You
And
got timing there, don't you?
yeah, we had time. We talked about that last week, and we talked about sort of the outside bar that came in, potential reversal, right? And this week we have the opposite. We have inside bar. So basis the weekly, Friday's low and last week's high is really, really important. So we're going to watch that very closely. And this is why I was trying to build up a case for watching the levels on the daily chart. And here basis, this is the cash. And this 59.50 really is a level, that'll get us into the zone where we're going to, slug it out like we did near the high. And the work isn't quite done here. We to really go higher, I don't know if you guys can actually kind of visualize the gravity up here. There's a lot to fight through and get on top, sit on top, and then move higher, right? Otherwise, it might be just another lower high or some kind of other kind of games that are being played. So timing is in place. We have an inside week. So those, I think those are really important things to watch. And we'll just follow through like we normally do. We really want to watch the high next last week and the low. So weekly high and low. We'll take it from there. Anything else before I move on to bonds, man? Anything you want to add to the S&P?
I think you summarized well. It's sideways. It's coiling up. You know the levels, and just watch and see which way they choose to take it.
Yeah, I mean, at the end, you have to take the practical side, right? If you're trading. So
Mhm.
that's kind of how you have to go with that. Okay, bonds. We did get the false break we were looking for. We were looking for a test of that low, January low, and we still have a low. Well, we look at it in the weekly, and now we're coming off, bouncing off of that flush or false break to the upside, and let's see what happens. I'm kind of watching to see, where this goes. So far, we haven't even done a quarter of the square, and we're just up 2 days up. I'm not counting the inside bar, so kind of a weak counter trend as far as that goes. And and when it goes to false breaks, we really want to watch this low because if this goes, then definitely we're going down to 90, and we're going to take out the October lows. And that level would be, I mean, that's fairly far. It'd be around 105. I know, unthinkable, right? But I'm just saying, if we take this low out, that's what's in store. Maybe not in the next few days, but eventually. So these are very, bond levels are really, really important on the square. An extended correction sideways or some kind of counter trend here would be normal, given what's potentially below. So we'll treat it like that for now. We'll watch it. I'm not ready to jump out and buy it. I just think we did a good correction. I mean, a good movement from this high to the low. It's one square. It's 45 degrees. And when that happens, you would expect some kind of a counter trend. And that's what we're working through. And we just want to see how that finishes. Anything you want to add, Ben?
The bonds look heavy,
Yes, bonds look heavy. The bars look, yep. Yep, that's true.
and it's been essentially sideways all year,
Hmm.
right? We're at the same place we were in January,
Yep,
with all the pronouncements and everything. So that's not a strong market, if because remember the low in January was coming off a pretty steep decline, really sharp decline,
right.
and we're in roughly the same spot where we were then. That's not actually much strength. So the correction looks like it just burned off time, really.
Yeah, that's true. Good point. Very good point.
So
Hmm.
let's see.
Let's look at the weekly bond chart. So, well, like you said, it is looking weak. And we weren't able to hold above the 114, and that was like really the clue. And now we had 3 weeks below 114. And so we continue to watch it. So it's on the weaker side. And ultimate target, I mean, the 106 area down below wouldn't be bad. That would really kind of bring things to a completion. And who knows, we might coming up on this 288. That would give us some great timing from the high back in 2020. We'll continue to watch it. That's pretty much it. Even bonds have an inside bar. So we'll just continue to watch it next week. Not much to add. All right, let's move on to crude. Speaking of sideways movements, well, it's been completely sideways, and that's what we were talking about, right? Since the lows came in, we're kind of consolidating under the 64.75 level. And the first sign of some kind of a push up would be to even settle above the 61.61, let's say 62 level. So until it happens, not much. I think more sideways wouldn't be surprising. Here's our crude chart, and not much to add, guys. We're still hanging below the 60-degree level. Let's just wait. I think it's great that we came and flushed out that floor, and now it's just a matter of waiting for timing to see how we get above that. So we talked about this last few weeks, so I'll move on.
I think that's a great chart too, Barry, because it just shows why
Mhm.
that level is so important.
Yes, yes. And the other thing I was just going to say was the fact that we're kind of hanging here versus, selling off. Not that crude can really sell off too much, but getting additional weakness is kind of bullish, when a market just hangs there without dropping like gold normally does, right? It'll correct a little bit, but it'll hang right under a key level, then it could easily grind above that. So it's semi-bullish the way it's looking, but let's see. We'll take it day by day.
Hmm.
Well, gold, what can I say? We're still in the correctional mode. We had a couple of good impulse moves going up into the high, and now it's time to correct. And we talked about, holding above 32.53 is positive, and we've been doing that. Above 33.38 would be even more positive. So we're correcting in a pretty good area. And even coming down to this 30.70 area is, still very bullish for the long term. And we're just burning off time, like Ben just mentioned earlier, balance price and time after this, near vertical move up. So let's let it finish up, and we'll continue to watch it till then. And this is also very bullish. 30.66 is the square of 52. It's a 50% level. We're well above that. We're kind of crisscrossing this 208, which means, to me, it looks, there's more upside, or at least we're going to go up and test the 50% level, 3,500. So I'll just leave it at that. It looks okay. But you can see the weekly also hasn't had any kind of a big correction, tight consolidations before breaking, right? So that kind of what's happening here. But the key here is to watch to see if we can sort of settle above 32.94. And this last week's bar looks pretty good. So next week, if we can hold above it, I think we might be ready to continue. So let's watch that. So we have to make sure that the lows are holding. Silver, pretty much the same thing. The sideways continues across the board. So not a whole lot to add. We talked about all the levels last week. We were holding the trend line. We need to really get on top of 60, 33.63. And well, when that happens, we'll deal with it and the potential test of all the highs. Up until then, this is clearly a very tight sideways market, right? So we'll just leave it at that. And kind of like Ben, kind of like you do, when something is really sideways, there isn't a whole lot to do until you wait,
No.
till the break comes, and then you can be ready to deal with it.
And Barry, in the commodities, gold, silver, copper, crude, nat gas, all, we just printed the monthly bars. All five of them had monthly inside bars. And you can
Mm,
see that in the charts as you're looking at them.
right. So monthly insights are really important to watch, right? So we'll, our patience will be rewarded, or all the commodity traders. So moving on to copper, pretty much the same story. I think everything we talked about last week can apply here this week. And until we get on top of 495, there isn't a whole lot for the upside. And long as we're holding above 4.5, 440, let's see, 447, we're okay. It's just consolidating on a bullish mode. There's a weekly little triangle starting to form. Here, basically, the weekly, we need to kind of get above the 480. We really haven't done that in a meaningful way. Not like we've held above this 144. You can see, if you look across the board, I mean, you can see this 420 level, how, we've gotten very comfortable above it. So we haven't really quite been able to do that above 480. I mean, we've had testing, we've been testing higher. You can see a high, last few years, and we're making higher lows. So the trend is up, and it's rather sloppy bull market, but it's moving higher. We're going through another little consolidation phase after we just made new highs. So um, let the process continue. Not much to add. Another one that didn't make a whole lot of progress. So the dollar, our stand is really the 90 down was a good low. And so far, we're making higher lows. So let's see how we do. I think we're bullish to the dollar as long as the lows hold. We square it out at the low. So long as that square holds, then we have to be looking for higher lows. So, and we got one last week, the week before. We just take it from there. And if the lows go, then obviously we open up the entire downside, 97 being the first target. If everything is held, we'll have to grind through all this. There's a lot of stuff happening here, a lot of overhead also in this area. If you look back, follow this red line. So up until we get above that, it's probably going to be a little bit messy here. So let's watch it. But at least the key thing is we want to make sure the low is held. If that's held, everything's okay to the upside. So we're going to key off of that for
You know,
now.
Barry, maybe it's the dollar that needs to break, this
To
sideways to kick all the other markets into gear. You wonder what's the tail and what's the dog, which one?
exactly. Well, dollar's definitely in there. Yeah.
No question.
Well, a lot of things are priced right that way. So,
Yeah, I mean, commodities are priced
hmm
in dollars. The bonds are
hmm
affected by the dollar.
yeah,
So everything is probably keying off of that market.
yeah. So, looking through all of that, I just feel like it's. I mean, I'm still bullish the dollar and not trying to make excuses for the dollar, but really looking at the hard numbers. Let's see if we can get through the square. If we get through, if you square holds, no matter how you wind this thing, it has to go higher, right? And if the square fails, then we have a couple of few more levels to go. And yeah, let's key off the dollar and see what
I mean, the
happens
good news is we don't have to predict, right? We're waiting to see the levels, and
and
whichever way
trade.
it
Yeah.
goes in all the markets, we know how to react. I was
hmm
just observing that maybe it is the dollar that's the key here.
Yeah, yeah, absolutely. Absolutely. So looking at the weekly, 98 and a quarter was the weekly support level, and we held it there. It ran up into the 50% level, found resistance. So now we're in between. Again, it's one of those areas where we're kind of hanging in between levels, pretty much like every market. So, Ben, you're bringing up a good point. It's not like the dollar's having its own trend while everything else is stagnant, right? It's like everything is across the board is kind of on hold.
And if you look
And
at it, and if you
mhm,
look at the monthlies, that's how I got the insight is that just I saw all these inside bars and sideways moves, and it's coiling up for some kind of massive move because when that energy releases, it's going to be across, you know, 10, 15 different markets.
right, right. And I would definitely be watching the crude charts, speaking of energy, right?
Hmm.
And all of that. So yeah, I mean the thing is markets consolidate all the time, and the key thing is to understand where it's consolidating and the weight of it, what it means. And the dollar is really important because you can see if we take out the 50% level here, it really opens up the upside. This is really, I mean, I mean, in a sense, dollar really flushed all the old lows, kind of like, crude doing it, and it held. So I think this really is the area to watch. The bracket is, 98 and a quarter to the downside, and we have 102 to the upside. And looks like 98 and a quarter is holding, and this is possibly a higher low. So I'm just gonna work it under that assumption, especially
Sure.
since especially since the low squared out. So not much of a choice. We'll go with that and see.
Yep. Let's see how it plays out.
Mm-hmm. Let's move on to the euro. I mean, not much has changed. The high came in pretty much with the same credentials as the low in the dollar. We're squared out at the high. Nice little correction right on top of 90, which, it's just a little bit bullish. And rally kind of faltering. So we'll see what happens. But we still have to move with the fact that the high is in place and this is a lower high, however this ends up being, up until the high gets taken out, right? So then we'll have to change the stance. Now that's what it looks like. There's a potential ABCD that could terminate this. Let's wait and see, especially with this weakness that we saw, last week. Let's see what happens, and we'll move along. along that path. And looking at the weekly euro, we're still above the 109, obviously, and this 1311 level, we're kind of crisscrossing. So let's see which side we settle on to. I think it's a bit of a lofty thought to think that we can get up above 90 and hold above 1311. But who knows? The fact is we haven't been able to do either one. We are not, we can't really quite hold above it for now, and we really aren't able to get stuck below because we keep just crossing every other week. So let's let it finish up and wait for it to start moving again in a direction. So the direction so far, we have the high in place and we have a lower high in place. So it, it looks like that's how you define a trend, right? Higher highs and higher lows. So we have a high and a lower high, and we'll just take it from there as it comes. Anything you want to add to the euro?
The level, look, watch the levels and see which clears first.
Yeah, yep. That's pretty much it. You covering natural gas today?
No, it's
No,
it's
not much, right?
sideways.
Yeah. See, there you go.
Hmm.
Sideways, holding the 298 level. So we'll let it get through. Hang Seng, again, another, everybody's holding to their spots, holding a very tight consolidation. We talked about, the holding right below this 144. And, I think it looks, I mean, after the tariff, low came in, we just made a beeline straight to the other side of the square. So it looks fairly healthy. This 22,709 is sort of the key that would tell us that the market is weaker, and we're well above that. And so I think long as all this tariff stuff's going on, it's probably going to consolidate between these two levels. So yeah, keep an eye on it, and let's see what happens. But now there isn't a whole lot to do when the market's perfectly sideways, other than to really know where the boundaries are. And I think that's kind of what I wanted to cover this week, just to um, just to make sure that we know, where all the levels are. Once you know that, then you can, easily sort of triangulate into the break when it eventually comes. That's
I
all I
think
have.
that,
Mhm.
yeah, that's critically important right now is to know, understand the levels, the key levels.
Yeah, yeah. And when something's consolidating, there's no need to jump in there and try to make all kinds of things out of it. Let it consolidate. We know what that is. This is not something alien, right? If you're
Right.
trading, you see consolidations all the time. So let's just deal with it in a practical way. Okay? So
Sure.
anyway, that's it for me. Let me put it back to you. And if you guys
Okay.
like our work, please subscribe, like, and hit the alerts and leave a comment for us. And I know I was supposed to make labels. So, zooming in, we had a couple of requests for the labels to be on the charts when we zoom in and out. So, you guys don't lose your spot. And I didn't have time to get that done today, but I'll adjust all of that in the coming days. My apologies.
No worries.
Ben, looks like the Nasdaq's also keeping with the theme of, hugging crisscrossing these key levels and just waiting to settle on one side or the other. It's kind of what I'm seeing here.
Yeah, it's that indecision theme I think is really, really prevalent right now when you look across all these markets,
Yeah.
not just in the commodities, but even in the indices. I mean, we're look at look where we closed. The
Yeah.
square is 21,366, 21,369. I mean,
Hmm.
we're right on the square there. This and it's been crisscrossing since middle of May, May
Hmm.
12th.
Hmm.
So we're going to pick a direction here soon, and when we do, we want to be on this move because it should be a pretty good move. Just like DES, we had, an outside bar and then a reversal bar. So let's watch 21,366 on Sunday night, Monday, and see if we open up on either side and can settle, it may finally give us a decision on this matter, which way we're going to go.
Hmm.
We did do 52 calendar days low to high. So that's a nice. 52 is a good number, a good square number. So the high fits in there. Again, though, we need to see what the price action around this key level, this is 225 degrees up from the October 23 lows. We want to see what's the decision made there.
Hmm.
The This overhead obviously is going to need to be dealt with either way. Either we get stuck under this big mess here, or we're going to push through and really run. So let's see.
Hmm.
Let's take a look at the weekly. See what the weekly shows us. There's your weekly.
Hmm.
We did make a higher high, but still closed within the same range of the last 3 weeks. So that's that sort of sideways. You can really see well the overhead that needs to be dealt with over here.
Hmm.
And on the weekly, the 50% of the square is 21,000 roughly. So next week, let's see uh, how we deal with that 21,000. And do we take out the low of the, like you were talking about with the ES? Do we take out the low of this week or the high first?
Hmm.
That would be important to watch. Let's take a look at the monthly since we just finished the monthly bar. Well, the good news is we closed above 21,100 to 50% of the square. The bad news is the bulk of the bar was below it. So it doesn't tell us, that we've cleared this yet.
The other bad
So
news is it's a lower high
it is a
for the
lower
monthly
high.
print. Hmm.
It is a lower high. So, you know, the odds of getting a full bar above unless we gap below, sorry, unless we gap down is going to be pretty small. And so we're going to have to see what, you know, most likely is going to happen is we're going to get another bar straddling this 21,100 level. But this had really good timing, and this is long-term monthly timing at the high. So we gotta treat this, very carefully and pay attention to these lower highs here
Hmm.
because it may mean that we need to come down here and retest again down here at some point, monthly
Right.
basis.
Hmm.
Anything you want to add here on the NQs?
No, we're good.
Okay. Let's go to our favorite crypto, Bitcoin, and interesting developments here.
Yeah, got a little
Last
shy,
week,
huh?
yeah, last week we talked about this 108 level and look at how many days we were crisscrossing that thing.
Hmm.
I mean, that looks like about at least a week, 10 days or so we went back and forth across. We
Right.
made a little higher high and now we've given it up and now we're below, we're getting bars below this full square at 108. So 102 should be next stop. And if
Hmm.
we lose this half square, then it's 96. So this looks like a rollover, right? And remember, we did low to high 44 calendar days,
Yep.
45 if you that's actually
Hmm.
a 45 because we have a double and triple top there.
Hmm.
So we did a 45 low to high. That's a good count. That's a good high. And we're giving it up.
Right.
So a high is in. If it's the high, I can't say right now, but a high
Hmm.
is in right now. Now we got to see how this correction plays out, right? Because we came down, lower high, faster move. Let's see
Hmm.
where this fast move ends up.
Right.
Ideally, we hold 96. I mean, super bullish, we hold 102. Ideally, we can hold 96. If we get below 96, then it's you're putting us back below this whole mess here,
Right.
which would not be great. All right, let's check the weekly. Weekly shows it's not perfectly symmetrical, but you got kind of three drives there, Barry.
Yep.
Push one, push two, and this is drive three. Let's hope it's not doing this, but it could be doing, a dreaded expanding triangle. I mean, a
Yeah.
huge expanding triangle, right? You put a trend line down here, one up here.
Hmm.
It's possible we're doing that,
Yes. Hmm.
which would be volatility city.
And we have the potential for a false break here.
Hmm.
So let us not forget that.
Yeah.
And
I
we
mean,
did
we
have a
already,
reversal. Yeah. Yeah.
yeah, we have a weekly reversal bar in place now because we took out this low.
Hmm.
So, and the key thing is we're trading below that 108 level. So, weekly basis, if we get this coming week, if we get a bar fully below there, then it's, odds favor we're going to go to 89. So, this is interesting to see how we're going to play out here. And since we just printed the monthly, let's take a look at the monthly. Look at that monthly bar.
Hmm.
And this kind of doesn't this if you look at this bar, this means we made a high, high up here, low down here, and we basically closed in the
In the
middle.
middle. Yeah. Yeah.
If that doesn't summarize the view across all the markets, I don't know what does.
Yeah.
Is that we've been stuck in this range.
Hmm.
And it's not just Bitcoin, it's not just the indices. There's a lot of commodities, and I think gives us. Unless you have anything else you want to add to Bitcoin, I can transition over to talk about the
Yeah. Well, just
commodities.
that we tapped the high, then we turned down. So that's
Hmm.
the directional in the pattern is the key, right? So
That's right.
I had to notice that.
So monthly, if you're watching, you want to watch the keys there, like 111, 111,000, and 93,000.
Hmm.
But it shows you the power of the square, right? When the high and the low are on the 50% of the square and the full square.
Yeah. Yeah.
I mean that's the range laid out by the square. I mean,
Mhm.
you
And
take
the
the
and the
square
bar
off.
before that kind of did that
So,
similar move.
yeah,
Yeah.
right here.
Hmm.
Yep. Yeah. So the Bitcoin really, really likes the geometry because it acts well, when it
Hmm.
honors the geometry. Let's put it that way.
Yeah.
So in talking about the commodities, one of the things that, when we get to the end of the month, I always like really focus in on the monthly bars and take a look at them and see what is the theme that I'm seeing? What is the sort of pattern? And the pattern is a lot of things have been going sideways and a lot of things have been consolidating, winding up, not making a decision yet as to whether, the next move is bullish or bearish. As I said in Barry's segment, gold, silver, copper, crude, nat gas, all five of those had monthly inside bars. Other ones with inside bars were cotton, coffee. That's it for the inside bars. The others were, and surprisingly, the grains, wheat and corn had monthly down bars, because I was pretty positive on them.
Hmm.
Beans had a monthly up bar. There's only two monthly up bars in all of the commodities that I follow. Cocoa was one, and beans was the other.
Hmm.
That being said, I think we're not going to today. We're not going to cover the grains. Because I've had corn and soybeans on the radar. They're still going sideways on the shorter time frames, still correcting, the
Hmm.
moves up they made. The fact that beans, sort of bucked the trend with all the other commodities and had a monthly up bar is a very positive sign. And we've been highlighting that one for weeks now after we sort of dialed in the low. So
Hmm.
so keep an eye on beans, keep an eye on corn. They still look good, bigger picture, like we have a bottom in place. There's just no upward momentum right now. They're just sort of in the range and going sideways. On the softs, we've been highlighting. We're going to go into the ones that we want to talk about this week. The first one being cocoa. So cocoa we highlighted as a long a few weeks ago. After this correction down here completed. We had a nice move up. We pulled back, and then look at the move we did on Friday. This was a test of this congestion area here, right
Hmm.
here.
Yep. Yep.
We came down, tested it, and then rocketed up and ended up on the high. So I think this week we may see some momentum, kick into this, like where
Hmm.
we're going to go at least test this high, if not, take out the full square up here. First, we got to get above 10,000. We got to clear that. So we'll watch for a daily bar that clears that, and then we'll know we're pushing up to more in the 11,400, 11,500 area. But it looks like this corrective move we got after the upswing is over, and now the next leg is starting.
Hmm.
We'll know it's in starting in earnest once we clear this 50% of the square at 10,000. That's the daily. Here's your weekly. And you can see what we did here. We came down, tested the full square at 9,200, and then
Hmm.
pushed up pretty strongly um, by the end of the day Friday, back out of this sort of congestion zone that we broke out of here.
Hmm.
So a lot like the daily, we need to see a full bar over this 10,003 level on the weekly basis to clear it.
Hmm.
If we can push up there and start trading next week, obviously, if we get a reversal bar, take out last week's high, that'll be a good sign that we're heading back up on a weekly basis. And here's the monthly showing one of the few monthly up bars in commodity land. We took out last month's high, which was here, right here, and ended up closing above it right there.
Yeah.
So as you can see, this 10,000 to 10,500 level, whether you're looking at daily, weekly, or monthly, is kind of key on the upside. So let's watch and see if we can get prices start pushing and holding above those levels. And then, you know, monthly basis, we can see 11, 12,000. Anything you want to add or any comments you want to make here on cocoa?
No, no, we're
Okay.
good. We're good. I think it's covered everything.
Yeah, it was the price action by the end of the week made me feel a lot better than the price action earlier in the week for the long.
Yeah. Hmm.
Let's jump to the next one. The next one is our short, and that's our short on coffee. Last week we were on the cliffhanger right here on the trend line. So nice
Yeah.
one by one off that low, and then look what we did. We sliced right through.
Yeah.
So remember that we got this ABCD up, like a perfect price and time ABCD here.
Hmm.
For those that didn't see it, let me show it to you. You can see how the reaction we got off of that came down, tested this 50% of the square at 380, went sideways for 3, 4, 5 days,
Hmm.
went down, got stuck under, and now we're heading right to the full square at 355. So here's going to be a really, really big test and an
Hmm.
important test. It's a test because we want to see how's it going to react to the low here. Are we going to get a higher low or a lower low? And then look at this structure here. If we get through that, then we're heading down to 290. But right now, momentum's down. The pattern looks good. Um, Under worst case scenario, we should do an ABCD down, right? And let's show you where that would take us.
Hmm. There you go.
Right into the support area. Let's
Hmm.
give you a price level there. That's around 312. And if we take out, if we can get below 335 and hold below, 290 is the target, 50% of the square.
Hmm.
So this one's playing out. It's acting well, and I think you stay with it, and let's see how it acts at these important levels: the full square, the ABCD target, and support. We want to watch all three of those for clues that hey, it's time to get out of this short and just step aside and take the profit. Let's take a look at the weekly. You can see we had a nice weekly down bar here,
Yeah.
sliced right through the full square, and now we're heading to the 50% of the square at 331. And you see what happens when we get these lower highs.
Yeah. Yeah.
That's what you were so calling it out on Bitcoin, right? You said, yeah, there's that lower high. You got to be careful. Lower high on a
Hmm.
weekly.
Hmm.
It's not a joke, right? You get three big
No.
reactions when you time it. So this is holding again. If we can get down in that 300 area, 290, 300, there's going to be support there. You got trend line support. You got a full square here. So we'll be watching to see how it acts at these levels. Let's
Hmm.
take a look at the monthly that printed. Now see here on coffee, we've got this looks like a lot of other markets, right? Inside bar.
Yeah.
But the key thing here, because remember, we're short this market. So the key thing is look at where we closed on Friday,
Mm-hmm.
right on 50% of the square. So if we get stuck below that, remember, we're going to have a monthly pressure down, weekly pressure down, daily pressure down. That's when you can get some nice moves.
Yeah.
I do think this area here is the target, right? Because you can see there's structural support, from previous highs. You got full
Mm-hmm.
square here, so that may be coming quicker than we think. But let's see.
Mm-hmm.
Anything you want to add on coffee?
No, we're good.
Okay. That's all for me this week. Like Barry was talking about, there's levels to watch in these commodities. You can, if you don't have the squares or you can't put the squares on your charts or you haven't started using the squares, just put horizontal lines, block off these congestions, and know the two extremes of the consolidations and watch them closely because too many markets are doing this for it to be coincidence. They're winding up for something. And when the something comes, if you're familiar and understand the important levels of those zones, you can take action and have the fast moves affect your bank account positively. Let's put it that way. Barry, the I know we have a request, so I think what I'd like to do the last here is have you walk us through maybe 5 or 10 minutes of how to use the 50% of the square, why we talk about that so much, why it's so important, and how people can use that in their trading. I think we've
Okay.
got about 10 minutes left,
All right, we can do that.
and I'll throw it back to you.
Mm-hmm. All right, so the 50% concept, I'll try to post some notes on squares and 50% of squares from Gann and also other sources on X. Maybe like not a pinned one, but I'll clearly label it. You guys can come up and read it there. In the meantime, for the segment, uh, you know, to get into the principles of a square and 50%, all the details and the foundation of it it'll just take too long for a short segment. But you guys just need the practical side, right? We talk about 50% levels all the time. We talk about full squares. So a full square, here's a square 144. You can see the divisions. And if you take a look, so the full square is basically 144 degrees up and 144 in time, whatever that might be. You know, if it's 1 minute bars, it'd be 144 minutes. If it's daily, it'd be 144 trading days and so forth and so on. And of course, if you divide it in half, we have 72 in price and time. So the concept applies to all the squares, no matter what the number of the square is, or the division of the square it might be. So it could be a 90, it could be a 60, 120. These principles we're talking about would apply the same. So one of the keys is to use the correct square with the chart, and that's something you'll have to try and see, trial and error. But once you learn how to do it, it's very easy to find out, which square a certain chart might be working, even for a given leg. So here I'm picking out the low from 22, and I'm calling this entire thing one leg going up into 2025 high. And if you and we've used this square in the past, so I'm just going
Hmm.
to use it here. So if you put it on the low, we're using the 50%. It's pretty much like a full square line. It's support resistance. It's sort of a gravitational center. And what we want to see is a price action around it. And the idea being, the full square is the ultimate target. So if you get to 50%, and if you're unable to get above it, expect some kind of a correction. If it squares out like it did here, expect some kind of a counter trend to balance out price and
And
time
Barry,
before it
explain
starts
what
again.
explain why that is a square out because it's 72 in price and 72 in time, correct?
Yes, yes. So here is 144, and this exactly where these two lines cross. If you look at 144, 144 days, going up, 144 degrees coming back down. And the way you get degrees versus price is you just use to multiply it to even it out because that's why the square is a square, not another shape, a rectangle. Because we want to balance that. Again, I don't want to get into the theory too much, but that's the idea, right? So, and
Hmm.
the one by one line where you get that is if you take it's one by one, right? Price and time are equaling, but that's how you get a one by one line. So when here, as you can see, when price and time squared out, meaning price and time are the exact same value, you can expect some kind of a correction, and which we got. We got a little correction. It held, around the quarter of the square and then ran back up, tested again, a little higher, and corrected again. Now we're getting higher lows. Now we're getting into structure, reading the market structure. And again, 50%, pretty good, stay right on it. Okay, so what's the story here with the 50%? Now, if we didn't have a 50% line, you wouldn't have any reference to this at all. You'd just think, well, using other, just let's say trend line methods, you'll just know, well, there's a high here and we're lower high, whatever, we'll have to come up with some kind of scenario. But having the 50% line there, well, the gravity shifts once we can settle above it or below it. And you can see here, we started to, shift above the line right before we took off, which is be right there. That's the point where we took off. And on the other side, when we were trying, we were making lower highs and it just kind of failed, right? And here it was a square out, so that was pretty clear. Now, once we cleared the 50%, normally we just make a beeline right to the full square. Here we got pretty close to it, and I think we went 7/8 by 288
Hmm.
and stalled, came back down. Again, once it's correcting, you're looking for it to find support at the 50% line level. Now, so the thing to note is the pattern that we look at often is, first we trade below 50% and then we flip to the upside and we trade the upside. We come back for check support. We hold at the 50% level and then we rally again. And then on the second time, we get to the full square. And then we get on top of the full square and here we retest it right there
Hmm.
and higher lows. And there you go.
Right up to the next 50% of the square.
Right up to the next 50% line. Okay. And then the correction, quarter square, back up. So the pattern basically repeated the whole way through. And the idea is, any time frame, we use the 30-minute all the time, 30-minute charts. You guys see the post on X. So the idea is if we're below it, it becomes a target. Now, once we finally grind out or however we manage to do it or gap through, get on top of it, then the next full square becomes a target, right? So it's very easy to do. And the 50% is somewhere, the market always comes back and likes to test as much as full square. So that's how you want to look at it. So we looked at several examples here spanning months. And here we didn't quite get to the full square and we corrected sort of an A, B, C, D down. And here you can see it came to the 50%. So what happens when it's like this? It didn't stop exactly on top. Well, then you wait. Did the low get taken out? What happened? So if you reverse immediately, that was some kind of a false break. It could have been a break to flush everybody out from that low before the real move begins. You can see how this entire leg started after this flush. So, and if that's right at the 50% level, what are you waiting for? Well, you're waiting to see if we can clear that. And we had a nice tight little inside bar right here, cleared it. Here's a not inside, I'm sorry. A bar above the 50% that cleared it, bar above 50% that cleared it. So you're looking for a reversal. And if we can hold above it, like we did right there, then, again, it's pointing higher. So we pointed higher, moved higher, pulled back, higher. Now we got to the full square, 288 degrees up, retested it, higher, retested. I remember going through this span, that's never ending. But we kept bouncing off the full square. That was the key, right? And then eventually we did this, so the false break and went for the final run. And from there, we know all the timing came in, and then we were looking for it to turn. And we were looking for the price to take out this full square to confirm it. Because why? Because long as we're above it, we could just continue to bounce along, right? And go higher. And that was at the 1/4 of the square from the low. What else? So now we're on another different square. So we're dealing with this coming off the low or the high, and you guys saw the charts. But I want to just use this just for an example of how to sort of watch the 50% levels along with market structure, right? And um, and how would you
So
use that? And, yeah, go ahead.
I was going to say, Barry, a good summary, I think, would be that the 50% of the square gives you an additional important price level
Hmm.
other than the full squares where you can make assessments like risk reward assessments, right? If we're
Hmm.
stuck below it, it means it's most likely going to go back down and test the full square. But if we get on top of it and we get stuck above, it means it gives us another sort of a halfway point of saying the risk reward now here is this, as opposed to only using the full square.
Yeah, I think that's a very good way to look at it. And you want to keep these things simple. Obviously, there are all levels of sophistication you can bring into this, and in the short show, we can't do all of that. I just want to point out one other thing. Like when we were, if we, you can move these squares around too. You don't have to just keep it in one place. And we normally do because it works for the way we trade. But if you take a look at this move earlier, I talked about how this could be a sort of a false break and how that could be. But if you put the square at the high, you can see the move came exactly to the 50% level. So that's
Mhm.
how you would know, oh, yeah, you know what? Let's just wait for it to reverse. I think we're good. Anyway, just wanted to point that out. I think time's up.
Yeah.
That's it. And if you guys
Listen,
have any other
everybody.
questions like that, let us know and we'll try to cover it.
Yeah, we'll try to do these. You keep this last segment open for questions, but have a great week, everybody, and good trading next week. And hopefully, we get breaking out of the ranges with the prices that we told you to watch, and then we'll have more action. Otherwise, be patient because in the markets and in trading, chaos always follows dullness. Always.
Yes. All right. Rest up and great job, Ben. And we'll see you guys next week.
Thanks, Barry. Take care,
Thanks.
everybody.
Bye bye.
Bye bye.